Good morning and welcome to today's Products in Focus, looking at the US30. It staged a late recovery later on in yesterday's session to stop just below 17,546 as most traders are waiting for tonight's FOMC statement, and I'm wondering if it's going to have more of a hawkish or dovish tone regarding the US dollar as more earnings come out as misses, blaming the stronger US dollar removing their competitiveness in the global landscape. Only Apple managing to shake that kind of negative shadow with record iPhone sales over Christmas, with them up 5-6% in post-market. So as you can see there, we do have a death cross there on the US30, which from a technical perspective would normally be quite negative, and we do have a flattening MACD indicative of more pressure, and certainly we haven't broken 17,546 yet. After coming off really strongly yesterday on the back of a very terrible durable goods figure, which was well below expectations. But we are off the session lows. It was down about 300 points at one point, so there has been a limited bit of recovery. But looking at today's candle already, we have been higher and we've been pushed back down. So certainly bears do seem to be in control first thing this morning. So that can all change, obviously, depending on what happens later on in today's session with the FOMC, which is due at 7 p.m. UK time. And of course, it's not the actual rate that people will be looking at, it's a statement from the Fed. We'll come back to that in a second when we look at FX. So the UK 100, actually, the opposite signal there. You've got a golden cross on the moving averages. Technical indicator is actually overbought, but not yet giving a signal to sell. Very strong hammer formation following on from yesterday's recovery on the UK 100. Very close to challenging all-time highs on the UK 100 as growth is accelerating at its fastest in 7 years, as we're coming up close to 69.06 as that all-time high, and we've got a doji formation just now with the UK 100 flattening out as we just enter into the start of the UK session. So that will certainly be one to watch, especially if we break to fresh all-time highs in the background of that quantitative easing by the ECB as well, which would certainly help propel the Eurozone, our biggest partners out there, and back into life. So looking at the Japan 225, decent move to the upside right here, breaking above 17,496, still eyeing up 18,306 with dollar yen quite volatile. It's down 1 minute, up the next. I don't think the dollar really knows exactly what it's doing, but it should have a better idea after today's session. Most technical indicators quite neutral. MACD is more positive than negative. And certainly we are coming close to shorter-term potential resistance just below 18,000. We might get there later on today, depending on how the macro data comes out, and there is a fair amount of information still to come out, including the crude oil inventories. We'll come back to that in 1 second. So looking there at dollar yen, death cross moving averages, flattening of the MACD. Most other technical indicators are neutral. Depending how that FOMC comes out tonight, if they don't really change any rhetoric, that would be seen as a dollar positive. But there are some commentators that think there might be more of a dovish tone to try and soften the strength of the US dollar. It's all about, are they likely to increase interest rates towards the end of the year rather than summer, which many commentators are kind of debating right now, especially when you've seen our earnings come in as they are, slightly disappointing. But the formations here on dollar yen is indicative of the fact that this could go lower, but all depends on the fundamentals. So we should know more by later on tonight. So moving on to crude oil West Texas, still looking weak, still bouncing around $45. Crude oil inventories today could be the thing that tips it up or pings it higher. That's due at 3:30 UK time, and there's been some big numbers coming out of the inventories the last couple of weeks with much higher than expected figures, and they're expecting about 4 million barrels extra in storage. We'll get an idea about that later on today. So gold actually had a decent rebound yesterday, surprising quite a few, but unable to break above $1,300, so it still seems to be the big pivot on yellow metal. So moving on to euro dollar, decent bounce yesterday again. We've not really followed through with it that much this morning. Probably not going to be a huge amount of activity before the FOMC statement tonight. That is going to be keenly watched. Remember, that's at 7 p.m. UK time, so there'll be many traders waiting for that statement to come out. It's usually a pre-prepared statement, so it will come across the news wires live at the same time, and it could be a fair amount of volatility depending on the language that is utilised. And if there is more hawkish, bullish dollar rhetoric on there, you could see a decent move on euro dollar, and obviously vice versa. So moving on to cable actually had a really good day yesterday in the back of those growth forecasts. bouncing around one spot 51.85, potential resistance that's remained in place for pretty much the whole of 2015. Be interested to see if we can follow through with that. A break and close above that, and the 21 period SMA would allow us to re-challenge one spot 54.24. So we've already talked much about the economic data due out later on today. Make sure you've got your alarm set for the FOMC. But remember, it's not just a decision, it's also the statement. And then fast forward on to tomorrow, you've got German unemployment rates, and you've got CPI and American unemployment claims and their housing index data. And let's just finish off on Friday there as well. You've got German retail sales, Eurozone CPI and unemployment data, and GDP coming out of the US. So a fair amount of fundamental data to round up the end of the weekend. As ever, keep your eye on the chart forum, make insights part of your layout going forward, and join me again tomorrow to find out what happened next.